Welcome back. Global advisory and communications firm Teneo releasing its 2026 Vision CEO and Investor Survey. The report features insights from more than 750 industry leaders and investors representing roughly $19 trillion in company and portfolio value. 73% of the CEOs and 82% of investors said that they expect the global economy to improve this year, saying America remains the most attractive market in the world for investment right now. Joining me now with more on all of that is the CEO of Teneo, Paul Keary, with me. Paul, great to see you.
Hi, Maria.
Thank you so much for being here. Give us your important takeaways from this survey.
You rightly nailed it. It's about $20 trillion of whether market capitalization or monies under management represented. When we connected at the end of last year, the dialogue may have shifted, but the world hasn't changed since then. Big ticket takeaways, all roads still lead to the US. US is the greatest beneficiary of foreign direct investment last year, expected to be again this year. Because of, I think, regulatory rollbacks, I think because the debt and equity markets are opening up for companies, and companies see opportunities, M&A, consolidation opportunity. The big takeaway is despite geopolitical tumult, despite the opportunities and threats of AI, despite maybe reglobalization, there's a sense of genuine optimism. And, the great Brian Moynihan was on with you earlier, and I think the Bank of America data also supports that 26 is going to be a year of growth.
Absolutely, and President Trump certainly would say that as well. He boasts a lot that he has been able to lure some $19 trillion of investment into America as he tries to ramp up the supply chain in the U.S. What specifically are the companies that you've spoken with wanting to invest into America? Where are they putting that money?
I think there's both an IP and a financial import reality in the US right now. Some of the best talent, some of the best balance sheets are looking at the US as probably one of the best places to get a return on your intellectual capital, your financial capital. And there's a whole host of reasons behind that you've covered very well here. So there is a global opportunity for consolidation. M&A is going to drive that too. But there is that optimism that you and I spoke of before, particularly after the election last year, hasn't dissipated. I think there's been some sense of that, an expectation or a hope for a normalization around trade and tariffs, and that will come when it comes. But it's also interesting that I think CEOs have become real resilient at disruption right now. Whether it's geopolitics, whether it's the emerging disruptive technology, whether it's political shifts, whether it's even the extension and continuation of war, CEOs know how to model this. They know how to work on a B2B and a B2G basis, and they're more resilient. They've got a very interesting muscle memory now than they never needed to have.
Well, they also know that the big, beautiful bill will have an impact, and there are a lot of things in that legislation that actually are enabling them to write off things, computers and cars and things that are specific for their business. How impactful is that big, beautiful bill in terms of tax code changes?
I think all aspects of the big, beautiful bill has led boardrooms around the world to think about what's their investment thesis now, what are the opportunities, the consequence. And again, all roads 1 year later on a year-over-year study basis still lead to the US. And so, 75% of CEOs expect to do more M&A this year, and a vast majority, not surprisingly, are going to invest more in AI. And also the AI legislation and the AI regulation, while some of the major thinkers in AI might not deem as perfect, they view it as very supportive of continuing their investment into the AI economy this year.
And AI is obviously a central theme. And this survey also forecasts a huge boost in spending this year. 68% of executives said they're increasing investment in AI. And one big discrepancy says that more than half of those investors say they expect a return on investments in 6 months or less. 84% of large cap CEOs say that's not realistic. So how do you jive that, the fact that trillions of dollars is going into AI, and in fact, we're not expecting a return on investment for some time?
Yeah, we a lot of conversations about this. And if 2025 was the year of the AI capex economy as a general narrative that dominated all of our consciousness, I think 2026 is going to be how the enterprise leverages AI, wrestles with AI, builds bespoke applications to turn their companies. You'll talk to the great Bill McDermott from ServiceNow. They're the type of companies that we're all going to be talking about to 2026, which is, and if you think about it, the technology system, the technology stack, the data center build out, all of that capital that has flown into the US and around the world is now going to enable this opportunity where companies are going to bespoke build, transform their businesses with AI as a catalyst.
What are they saying, the clients of yours, about jobs? Because there's a real worry that while AI is going to change the game in terms of how we work and how we live, it's going to kill jobs, particularly white-collar jobs. So is there a plan in place that you can communicate from these corporations to replace those jobs will no doubt go away because of AI efficiencies?
Yeah, even some of the conversations I've had this week already, a lot of great companies are talking about, and our data supports this, which is 2026 is a year of increased employment for companies, albeit a lot of that is about investing in engineering talent, software development talent, prompt engineering talent to best leverage and bespoke build solutions around AI. So I think it's too early to talk about displacement when companies are still in talent aggregation mode and talent build mode. So I think the future power of AI, its displacement issues, are too early to talk about that. And we're still in the early stage era of how does the enterprise leverage this technology to transform their businesses.
Well, I mean, the spending is incredible, and the market has been reacting to what some see as too much spending, trillions of dollars every year on AI. What can you tell us of that? Is that realistic? And what are some of these companies paying for AI engineers? They're paying up, aren't they? Salaries are going up.
Yeah, the big ticket number related to the trillions of dollars of cost is if you listen to Dario this week, who just came from a lunch with him from Anthropic, he spoke about the trillions of dollars of revenue capture opportunity that are going to occur in the next couple of years. So the concept of trillions of dollars investment is supported by the expectation and hope that a whole range of industries and companies, and America being a leader in that, are going to actually benefit from trillions of dollars of market capitalization and revenue upside.
Well, we are definitely waiting for that. Paul, it's great to get your take on this. Thank you so much. Paul Keary is the CEO of Teneo.